this trade has happened this is 3 weeks in a row. If you've not participated, this is where the doubts come in. At some point, this is going to stop working. Something seems simple. It doesn't mean that it's not a good idea. This is a concept that I think a lot of traders struggle with, and particularly the more experienced you get, the more something really, really simple almost feels like it doesn't have enough to justify the trade. And the S&P of late has been a great example of this. It's a market that has done really simple things since basically the beginning of September. We're going to go and have a little look at that in just a moment. But one of the things that, traders get over time is this kind of experience that, most trades that really work out have many layers of complexity, many layers of reasoning. You can plan out when you think there's going to be a good trade. Take, say, for example, Federal Reserve Day. The Fed this last week, very, very choppy, very, very difficult to trade. But most people would assume that would be your biggest opportunity. And it is. Generally, this is where we make a huge amount of our money. If you want to understand more about how to trade central banks, click on the link, come and see some of our training. But the S&P of late has been really, really straightforward. If we take it from the day after Labor Day, where we had this gap down, the S&P gaps down, turns around, and this has been a theme for really the last month or so. I'm talking August as well. Any gap down, the S&P starts to turn. But what we then start to see is it reacting really, really technically cleanly, as I would describe it. It drops back to obvious points. If we go back to this day, we had most of the day's range contained below 83. It was 26 on the old contract. Contained below there, we break up at the end of the day. So this is just RTH session. Now, you come into the next RTH session, someone said, if you've got to place a bid, where would you place it? Well, you'd place it on that volume at the top of yesterday's range. And we hit there and we react. The following day, we open small gap up. Again, where would you place a bid? The obvious place is on the gap and on the value area high. It hits it and it rallies. And you follow this on and on and on. Payrolls would get you in a bit of trouble because with the gap up on payrolls, the obvious place to buy is the gap fill. It doesn't work, goes through, you get stopped out. But then where do we bounce from? Previous support. And we bounce back. And one of the discussions I had with a trader recently is almost a sort of throwaway comment. He was like, imagine how well you would have done if you picked every clear level that you've got, gave yourself a 5-point stop and a 10 to 15 point target and done that for the last couple of weeks. You would have got on very well. And this is why I've run this, because I looked and thought, well, yeah, if you gave yourself a 5-point stop, that would be 3 wins in a row and 1 loss. And you carry that forward the day after payrolls. This is the Monday after payrolls. The range that's established is very, very similar to that post Labor Day. So you buy the top of that range and it works. And you buy the top of that range the following day and it works again. Maybe you wouldn't get paid particularly well here, but you're still getting 10, 12 points out of the S&P. The next day we come in gap up. Again, I think you're taking a loser here, because you'd buy it on the top of the payrolls high. That doesn't work. Comes down though, and also doesn't reach the value area high. So this would be a losing day, this one in here. But you can see how many days that you've got a loss. You've got 1 loss. This turns into a winner. This turns into a winner. And you would have recovered the loss on the payrolls day as well. So we've got at the moment 1 day where we have a loss. The next day comes in. Difficult if you're trying to buy, because this is one that has a slight difference to it contextually. We're opening in range. So with the open in range, it's quite tricky to define where you're going to buy. It opens just on the value area high, so that's one approach. The other approach is to play the break of the high. It's a very bullish market. You can play the breaks of highs. And the trade again works. And what I'm not sort of saying is, it's just easy. You just do this all the time. It's about recognizing the context. It's about recognizing that this is reasonably consistent at the moment. that the S&P is a market that is just constantly dropping back onto previous support. Again, it does it the next day. Opens inside range, trades down to previous value area low and reacts, and back up we go. And you follow that even into the week of option expiry and of the Fed. Same story again. You come in on that following week. This was the breakout day that we just looked at. This was the following day. This is a day that you're not really going to gain anything from here, because the fact you open inside range, yes, it reacts off the bottom of value, but not really sufficiently and too late on to really gain anything from it, but still not a losing day. Same story again, beginning of the next week. Gap up, quiet day, rolls back, previous high and bounce. Same game again and bounce. On the Fed day, a bit like payrolls, we get a decent area of support. This would seem a very, very obvious buy. We don't get the reaction that you want. You would get stopped out. We then fall down onto previous low and we get the reaction again. And this follows on and on. And this is one of these types of scenarios where you look at it and you say to yourself, well, I need to keep on doing this. What's hard is once you've seen it enough times, and this is really important, this is not advice on how to trade. We're at a point now where this trade has happened this is 3 weeks in a row. If you've not participated, this is where the doubts come in. At some point, this is going to stop working. The thing you always have to remember there is you don't know when the end of this is going to be. And in that respect, if you don't know when the end is going to be, guessing when the end is going to happen is really dangerous, because if this goes on for the next month and you've decided, I'm not sure that this is going to work anymore, what you'll end up with is a situation where you end up missing out on maybe 10 more decent trades. And you've got to think about the opportunity cost. The opportunity cost of missing those trades is far, far higher than the fact that at some point you're going to do this and you're going to lose 3 times in a row on a day. And you say to yourself, do you know what? I think this idea isn't working anymore. And then you can drop it. Always, when you're doing something consistently and straightforward, the best indication that you need to stop is losing some money. You need to take that loss because you don't know when the end of that winning streak is going to come. Sometimes things are as easy as they look. Sometimes you just have to do them. And that's something that, as a new trader, I think most new traders are far better equipped to do than more experienced traders.